This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurer. Today we're going to talk about why no good deed by an insurer will be going unpunished, and why that punishment was the attempt to succeed with a bad faith suit, which requires vexatious, arbitrary, capricious, or without probable cause conduct. And because State Farm believed it did not qualify under those terms, it moved the court for summary judgment to dismiss the bad faith claims. In a suit entitled Gentilly LLC versus State Farm, a December 30, 2024 decision of the United States District Court for the Eastern District of Louisiana, the motion was resolved. This case arose out of alleged damage to plaintiff Gentilly LLC's insured commercial development, the Gentilly's Shopping Center. State Farm insured the property under a business owner's commercial policy that scheduled the insured property as 13 different spaces. The policy covered accidental direct physical loss to property, subject to certain exclusions and limitations, including wear and tear. The policy does not cover interior rain damage unless the building first sustains damage by a covered cause of loss to its roof, outside walls, or outside building glass through which the rain enters. On September 7, 2021, GSC submitted a claim to State Farm for damage to its insured property caused by Hurricane Ida. State Farm and Gentilly, over a long period of time, mutually inspected the property. The inspections were conducted by Gentilly's public adjuster, State Farm's adjuster, and various experts retained by both parties from September 28, 2021, all the way through November of 2022 and March of 2023. On March 29, 2023, State Farm received an estimate from property damage consultants for replacing the roofs of all 13 buildings. The estimate was in the amount of $12,509,747.72. But that estimate did not explain why the roofs required replacement or outline the damage caused by the storm. An expert retained by State Farm called Held completed its estimate on September 18, 2024, and it exceeded the amount of loss estimated originally by State Farm based on another expert's report. And on October 10, 2024, as a result, State Farm tendered Gentilly the difference between the JS Held estimate and the estimate based on the prior expert's report, which amounted to $370,204.66, bringing the total payment close to $1 million. State Farm moved to dismiss plaintiff's bad faith claims. It argued that it timely issued payments consistent with the opinions of its experts, and it had a reasonable basis for disputing the damages it did not pay. Plaintiff opposed the motion, claiming there was an undue delay in retaining an engineer to inspect the property and all that. The October 10 tender is per se evidence of bad faith. Some people are never satisfied. Louisiana Revised Statute Section 22:1892 and 1973 govern bad faith insurance claims under Louisiana law. A claimant is entitled to penalties if, after satisfactory proof of loss, the insurer fails to pay a claim within 30 days and the failure is deemed arbitrary, capricious, or without probable cause. To establish a cause of action, a claimant must show that 1. An insurer has received satisfactory proof of loss. 2. The insurer failed to tender payment within 30 days of receipt thereof. And 3. The insurer's failure to pay is arbitrary, capricious, or without probable cause. State Farm did not finalize the estimate unduly late, according to the court, given that it had to inspect the property over multiple sessions. There was no evidence that State Farm engaged in vexatious conduct to hamper or delay the inspection or payment, since the timeline played out because of limitations of both sides' availability. Finally, plaintiff argued that State Farm's most recent payment of $370,000 was per se evidence of bad faith because it demonstrates that State Farm underscoped the damage at the outset of the claim. The United States District Court concluded that this payout does not amount to bad faith because defendants' actions were consistently in line with its expert appraisals, and State Farm was not dilatory in payment after the scope of loss was determined. When its inspector returned an estimate, State Farm paid the amount within 30 days. The USDC refused to evaluate a bad faith claim by hindsight. The United States District Court also concluded that the final payout did not indicate anything of arbitrary or capricious behavior. Although the payout process was protracted by the scope and complexity of the insured loss, plaintiff failed to raise a genuine issue of material facts, including that State Farm's actions were arbitrary, capricious, or without probable cause, because there is no evidence that the defendant engaged in vexatious conduct in evaluating and paying plaintiff's claim. The court granted summary judgment on plaintiff's bad faith claims, and for those reasons, the court granted defendant's motion for partial summary judgment on plaintiff's bad faith claims. In my opinion, this claim seemed to have grown like topsy. Every time State Farm paid, there was another inspection requested and new damages claimed. And each inspection apparently found damage, which, when discovered, State Farm immediately paid after a prompt inspection. After the claims were paid in different months, the insured decided to increase their claims in multiple million-dollar amounts to replace the roofs on all the buildings, whether damaged by hurricane or not. But they were not capable of being established. State Farm paid what it thought it owed and refused further. State Farm's proper claims handling and prompt payment was honored with a bad faith suit. The court, in a lengthy opinion, outlined each inspection and each payment, concluded there was no bad faith conduct, and stopped the punishment of State Farm by granting the motion for summary judgment, at least with regard to the bad faith claims. This video was adapted from my blog, Alma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog, and will get you notice of every blog posting, usually 5, sometimes 6 a week, and give you access to all 4,950 blog posts. You can also subscribe to the videos. They're all free. Please tell your friends and colleagues about these videos, and ask them and give them the opportunity to subscribe. And if you're interested in further detail about insurance, insurance claims, insurance fraud, and insurance law, please consider subscribing to my Substack publication. Thank you for your attention.